All right, we are doing Lab 4.2 here, and it's the only lab question in Lab 4 which is required. We do have a review lab that we'll do in another video, but here we are. We're supposed to do some financial statements for Gulf Corp. They began operations on August the 1st of 2013. Their account balances are shown for July 31st, 2014, and we're just simply putting them into a set of financial statements. So the rule with lyrics, the sort of rule of thumb, is to put as many headings in as possible. But let's start with the titles, because I always forget the titles and then I end up having to redo it. So the income statement is for the month ended July 31st, and the statement of changes in equity is also for the period, the month ended July 31st. Now, is that a month? Actually, I don't think it is, because it started on August the 1st, then it ended on July 31st the next year. So let's make it the year ended July 31st. That's probably a little bit better. Okay, the balance sheet, on the other hand, is just the date that we took the balance sheet. So it's a single date, it's a snapshot, as opposed to the period. So for the income statement, we're going to start with headings and totals. Usually we start with revenues, and then we'll have some revenues, and then we'll put in a total for total revenues. That usually shows up. A couple ways you can do that. Do total revenues right there, and then we'll have expenses. And give ourselves a little bit more room, and have total expenses. And then from there, we should check to see whether we've got an earnings before. Well, it's easiest to check the headings list. We don't have any subtotals for classified income statement, so we're just going to have the net income number following that. And then we began operations on August the 1st, so our heading would be balance August the 1st, and then we might have issued some new shares. So here we have issuance of shares. We'll have net income, and then we'll have dividends, and then that should give us the balance at the end of the period, July 31st. Okay, now over on the balance sheet down here, our headings are going to include assets, and then we'll have current assets, and then we'll have a total for current assets, and then we'll have some long-term assets. Not sure, that's not always a heading, but if we've got maybe long-term, we don't have anything. We could put in property, plant, and equipment as a heading, but that's usually not required in lyrics. But it looks like it may be actually looking for that. Let's try that. Put it in as property, plant, and equipment, so all of the sort of long-term assets. So that will include equipment and machinery and that sort of thing. And then they have a total. Headings and totals. Total property, plant, and equipment. And over on this side we'll have headings for liabilities, and then we'll have current liabilities as a heading, and then we'll have a total for current liabilities, and then we'll have long-term liabilities, and then we should have a total for total long-term liabilities, and then we'll have equity, and give ourselves a little more room once again, and we'll have a total equity, then we'll have total liabilities and equity. There we go. Okay. Now we did have a line there for total liabilities, so let's put that in as well. There we go, total liabilities. And then, of course, when we're done over on this side, we'll have a total assets number at the bottom, right there. Okay, so now let's start putting some pieces into the right places. We'll have a few current assets. One of those is going to be accounts receivable. Usually put them in order of liquidity. So, oops, that's the wrong place. I'll get rid of that one. Okay, cash is usually our first current asset. 5920, the amount of cash. We often have inventory. There's no inventory listed here. We may have some prepaid. There's a couple of ways we can do this. We can either do it sort of picking out the items for each category or just doing them in sequence. Let's do them in sequence. We have accumulated depreciation in equipment here, and accumulated depreciation is part of property, plant, and equipment. Okay, so the accumulated depreciation is going to be part of the net property, plant, and equipment. Now, if we go down to this, if we go to assets, we'll see what it says for the property, plant, and equipment. It actually has some subtotals for, or it has some headings for accumulated depreciation. So, and it's under the assets list. So that kind of indicates that we probably should put them there. So let's put in equipment. And we'll take off the accumulated depreciation for the equipment. And then we'll have machinery. Let's put some numbers in. The equipment is 12,280. The accumulated depreciation is 1,460. And the net book value is going to be the difference between those two. Probably should pull these over into the other column just so that they are correctly subtotaled. You could leave them here and then on the total current assets just do the subtotal over here too. That works as well. So we were working on machinery, weren't we? Machinery and accumulated depreciation for the machinery. Make sure we have the numbers 7940 and 1380. Okay. Now that gives us the net book value for the equipment, and this gives us the net book value for the accumulated depreciation. And we have bonds payable. Bonds payable are due March the year of 2018, so that's going to be a long-term liability. Oops, put that in the wrong place, didn't I? Still put it in the wrong place. All right. Okay, so then commissions earned is going to be a revenue item. So let me give us a little bit more room there. We have commissions earned for 4620, and we have consulting revenue earned for 8320. Both of those are revenue items. Depreciation expense. We have depreciation expense for the equipment. Depreciation expense for the machinery. 1460 and 1380 respectively. You can see that the accumulated depreciation is the same as the depreciation expense because it's the first year of operations, which makes sense. The dividend amount. Dividend comes in to the retained earnings as a negative number. Whoops, that's the wrong end. Backspace, go home, minus, and then we just drag this over to the total as well. Interest expense is an expense. 1900. Land is an asset, a long-term asset. We scroll up a little bit. Put that under property, plant, and equipment. Now, do we have a heading here for long-term investments? We do, so let's put that in there. It's always a good idea to have long-term investments. Well, as many headings as you possibly can put in. It's never a bad idea to have more headings. Long-term notes payable would be a long-term liability. We don't have room, so we have to give ourselves a little bit more room. Long-term notes payable, 13,030. Okay, patents would be their intangible assets. Not sure whether we have a heading for that. Oops. Headings, intangible assets. There we go. Okay, so patents are intangible assets. I'm thinking we may actually have to change the structure here a little bit because we're going to want to have subtotals for all of these. So let's put them into the correct column. Property taxes expense for 5420 goes in our income statement. The payable, of course, is going to be a current liability. Don't let us wait very long before they make us pay our property taxes. So usually those are current. Rent earned would be another revenue item. So put that in here. Income statement. 7,020. Okay, missed my number. Oh, I didn't. Excellent. Rent expense. Okay, so we're renting from somebody else. That goes under expenses. 2150. Rent payable. In all highlights here. Rent payable would presumably be a current liability. 7310. Share capital, of course, is under equity. And it's 8230. And we probably take the 8230 and put it into issuance of shares as well, because presumably we didn't have any shares at the beginning of the period. There, we haven't figured out our net income yet. Short-term notes payable would be a current liability, 11,290. And a trademark would also be an intangible asset. Put that here under intangible assets. And we're going to have to have a total for total intangible assets. Okay, and the trademark was 3720. Alright, so now that that's all the information. We've got everything checked off and everything put into some place. We can shrink the size a little bit. Using some empty lines. Okay, we probably should put a total in here for total long-term investments. Anytime we have a heading, we usually require a total. Okay, so our statement of changes in equity, we start with 0 in all three cases. And both share capital and retained earnings and the total. Net income we haven't figured out yet, so we're going to have to do that. So let's go up here and fill in some numbers. So the total revenue is 19,960. The total expenses and then the difference between those two would be our net income. So we can drag that down here, drag it over there, and since that's the only item there, we can drag it down. Okay, 2650 minus 2650 minus 1920 will be our retained earnings, and we can either take the total that way. Probably not a bad idea to check it going downwards, so 8230 plus 2650 minus 1920 gets us the same amount, but don't leave it there because Lyric's going to be upset with you for putting something you should have put in there. Okay. Alright, so now we can go down to our balance sheet. We're going to need one more line in here because we have retained earnings. And we can just drag the retained earnings number in from there. And the total equity number as well, 8960. And so our total current assets are just these two. And our equipment, all of these add up to a total for property, plant, and equipment, 27,650. This is the only item there, so we don't add anything in. Okay, now let's see what our total assets are. It's going to be the 14,900 from current assets plus the 27,650 for property, plant, and equipment, 5510 for investments, and 8350 for intangible assets. So 56,410. All right, let's see if that balances on this side. Current assets, or current liabilities rather. And our long-term debt. And let's check to see whether it balances. It does balance. So we've got all of our headings, we've got titles, we've got dates, we've got everything in there. Let's see if Lyrics can find anything wrong with what we've done. Okay. Oh, we didn't come up with a total liabilities number. I'll assume you guys can handle that on your own. So the total liabilities would be the 22,370 plus the 25,080. So that should be a subtotal for the total liabilities. We've got the correct total for total liabilities and equity. So I'll leave it there for now. And we're done.